Hello, friends. Once again, I welcome you back. Today, I'm going to be talking about the liquidity concept, or actually, it's liquidity concept. So, this episode, it is meant for my mentorship students. But given that all my students, I got them through YouTube. This is I've thought it wise to share it even to my subscribers. So the same episode is going to be the episode to my students that paid for mentorship. So I'd like to apologize. I took down the video that I uploaded yesterday. Someone commented that I talked too much before going to the point. I apologize because the intention was to first explain some things that would impact on the psychology, but I ended up not being organized. I apologize for that. So we are going to proceed. So, what is liquidity? By the way, this is an SMC strategy. If I can give a quick reminder, uh, yes, I understand that in mentorship, I do SMC. And SMC, as I talked about it yesterday, basically, I feel it originates from ICT. So, personally, the major strategies that I've studied so intensively is ICT, SMC, and BTMM. So, in the coming 3 videos, so I'm just updating on what's coming next on the channel. In the coming 3 videos, I'm going to be sharing some SMC knowledge. Then later on, I'm going to share something in BTMM. BTMM, it's an indicator-based strategy, and then we are going to be focusing on moving averages. So this is one of the best. Actually, there is no holy grail strategy because it comes back to how you backtest and do your practice. But it is not holy grail, but it is so good, BTMM, and it's for indicators. So why am I going to do that? It's not that I'm going to teach the whole strategy, but I'm going to be sharing some of the key things that I like out of it because it's so detailed and I had to pick out what I need. You get? So the same, if you're watching, you get the information and then you apply it and then you get out what is best for you. You get? Because we can't all be the same. We can't use the same concepts. So in the coming videos, I'm going to be sharing BTMM and majorly we are going to be focusing on the moving averages. So that's it. So let's go back here. And then the other thing, this is VIX 75, but trust me, it doesn't matter whether Forex, the concept stands. You get, what matters is the concept. What matters is the concept. For those ones that think that these things are not applicable in synthetics, even this concept liquidity, it applies to boom and crash. Anything that has a candle, you get. So what is liquidity? Now, SMC traders, now I'm going to be talking about mostly SMC. Now, SMC traders believe that they are retailers and then their institutions. They are retailers and their institutions. Now, what are retailers? They believe retailers are these small account holders like traders, these small banks, commercial banks, and then institutions. We believe these are the big boys, the hedge funds, those with big amounts of money. You get, they bring in a lot of volume. So which means we believe that these institutions, they place big orders and their big orders have a big impact on the market. They are those big orders that move the market. So which means if they choose to consolidate this part, they consolidate it. Because if I told you we're trading 10 lots and then someone places 1,000,000 lots, those are people who are placing an order of 1,000,000 lots they say to buy. So their volume is so big. So these are the big boys. But I don't think there is any institution that is watching this video. So we are all retailers. That is the first thing. But what can we get out of this concept of retailers versus the institutions is that SMC traders believe that retailers react to market patterns. They react to market patterns. Now, let's say the market moves like this, and then they call this, let's say, a falling triangle. You get? let's say a falling triangle, and now this is it. So retailers react to market patterns. They make Simanya a rising wedge, let's say, or a rising wedge. I'm not trashing those strategies, because what matters most is the way you perfect that craft. Those patterns work, but here, if I'm talking about SMC, I'm bringing out the concept of SMC. Not that people who drew, let's say, something like, I don't know how over this is a falling wedge or a rising what, I don't know. It's not that they don't win. No, they win. What matters is you perfect the craft. But according to SMC, this is what they think, that here, people who draw these patterns, you get, there are a lot of orders that are resting here, you get. But as we are trading, what should we be focused on? You get, what should we be focused on? Who is a good trader? A good trader, a good trader is that person who is able to interpret what is currently happening in the market and react to it, either to get in or stay away. It is important to know that area where you have to stay away. It's not all about knowing every time where you're going to put an entry, which means when we bring in the concept of liquidity, SMC traders believe that not all areas are tradable. You get, there are certain areas that are tradable. You get, where we trade. So for you, which means there are a lot of orders. Let's say for this, I'm going to use currently what I'm having here. Let me first do this. You get. So now, there are a lot of orders that are resting here, because there are people who are seeing this level as a level of resistance. You get, there are a lot of orders that are resting here. Likewise, there are a lot of orders that are resting below here, because people are seeing this area as an area of support. You get, as an area of support. So now, that's why we bring in the concept of liquidity. You get. Now, liquidity are orders in bulk placed at a certain area. You get, orders in bulk that are placed in a certain area. So now, in this example of today, you get, the example of today, what we are going to look at is, what are those areas? We are going to today we are going to look at one example. Some of the areas where we find large orders resting, or where people are eagerly waiting to place entries at the highs and lows of the day. You get, highs and lows of the day. So now, as I'm proceeding, the institutions, you get, because SMC traders, they want to trade in line with the institutions, like getting the perspective of the institution. So now, don't expect that someone who is driving that market, who is placing, let's say, 1 million lots, is going to be basing on this pattern that has been made. You get, this pattern that has been made. No, they don't. They create this pattern, yes, but then he's not trading this pattern. He's interested in a certain area. You get. So they create this level of resistance here. You get. Now, there are a lot of orders. Now, we say that liquidity are orders in bulk placed in certain areas. Now, there are a lot of orders that are resting here, not because that these institutions have placed them, but there are people who are buying at this point down here. You get. And then there are also people selling in case we break out. You get. There are those breakout and retest traders. You get. So there are those who think the market breaks out and then it retests and then they sell. Not always that the market will be doing that. You get, breaking out and retesting. There is no logic in that. Why should it break out and retest? So that's why I would advise that you watch some of my previous videos, fair value gaps, imbalances. You get, that is those are more concepts of ICT, because the market targets imbalances, fair value gaps, those imbalances in the market, to fill them up. That is more logical. You get. So now, SMC traders, now if I told the market maker wants to buy, now he wants to liquidate. You get. So liquidity are those areas where they're going to liquidate. You get. So the market maker can place, let's say, a pending order here. You get, buy limits for instance. You get? Now, given that there are people who have placed orders here, some who are buying, you get? And then there are those who are selling the moment we break below. So for the market maker can place, let's say, an order here, a sell limit here. So they break out aggressively and then they come back in the range. You get? So they've liquidated those ones who were buying here, they come. Trust me, normally your stop loss is just here, about 30 pips. They come, they move 30 pips below, and then they move back up. You get? They move back up. So now you have to be keen. You get? Sometimes as you mark out, as they approach areas of the low of the day of the previous day, you get? We have this low, and now they had created this level. They come, break below, and then they move up. What are people seeing this as? They're seeing this level. They are drawing. There's a lot of people that are having orders here, so they come for these ones. They reach here. Remember, they've been buying and selling, following this trend line. As they reach here, there are a lot of people who are selling here. You get? There are a lot of people who are selling here. They sell, they move, they just move out. You get? So liquidity are those areas where large orders are sitting. You get? And then so which means we shall be watching out for these areas. You have to watch out for these areas. As we break out, you have to analyze where does the market maker want to go. You get? Likewise, we can see this blue area. This was Saturday. If you go on Big 75, this was Saturday, and this was the highest point. You get? The highest point Saturday. So now we move, Sunday moves as we approach the high of the day. So we've taken out traders here. The market maker now moves. You can see that as we move here, we move steadily up, and then we target the high of the day. After reaching the high of the day, we can see now they made this reversal, and then they came back down. You get? So basically, I wanted to make that introduction of the concept of liquidity, and then to my students, it's an emphasis because I had made some bit of introduction to it. You get? And then maybe one more last point. Now there is a characteristic. Now this one I'm saying it because of my students, because I'm going to give them the same content. Now there is something in the markets. Markets are fractal. You get? Markets are fractal in nature. So which means you're going to see liquidity on M1, M5 at all time frames. You get? At all time frames. So now you have to use a number of approaches. You get? Let's say top-down analysis and the rest. And then you you look at the entry models. I've gone through the entry models in mentorship, so that as you approach such situations, you get. So basically, the concept of liquidity are going to be those areas. So even as they catch our interest, so as we approach those areas, we have to understand them. We don't rush to get in. You get? We don't rush to get in. There are those moments when you have to stay away, and then there are those moments when you have to get in. And then when you get in, you have to know where you're going to get out from. You get? It is so important. So to my viewers on YouTube, I wish you the best. I like you so much, and let me get some likes. Don't forget, you can stay tuned, you subscribe, as in the near future I'm going to share some concepts in BTMM. You get? Because I found that most of my watched videos are on indicators. You people love indicators. You want someone else to do the hard work for you. So I believe BTMM is one of the best strategies. Actually, sometimes it even beats SMC. Though personally I like SMC more and I use it more, but also these days use the concepts in BTMM. I wish you the best and peace.